Devices yesterday, so I forgot to actually apply my mic to on the streaming device. So thank you, FS Group on YouTube. You actually notified me about this bug, right? Thank you so much, FS Group. Thank you so much. I'm so sorry, guys. I'm so sorry. Right? I think I have a recording of these tools. Unfortunately, I don't think my voice was being recorded. So thank you, FSP Group from YouTube. Thank you for letting me know. Thank you for the information. Thank you so much. So this is how you guys know you keep on risking. So right here, if you have logged in 5,000, you can go to risk 2,000. You know, if the market go against you, you lose 2,000. You are left with 3,000. But I don't want to lose 2,000 right here. I don't want to be greedy. If I have $5,000 in my trading account, then I want to risk one. Why should I risk 2,000 and then be left with 3,000 with all the days and weeks I've dedicated right here? I don't want to do that, right? So I risk 1,000 again. I know if things goes against me right here, I'll lose 1,000 out of the 5,000. Then I have 4,000. So the market goes down again. So this is how I do. This is how I risk. Now let me show you guys why. Or let me show you this. This is how I traded on the US oil market. This is how I traded on the US oil market. So this is just an example right here. So at this medium right here, I took the first entry right here. As the market got all the way down, I added another one at this retest structure. I added the third one right here. So at this medium, after the price got all the way down, I risked small right here and I lost a little right here. Now I made another entry right here. Now all my stop loss are this high right here. So if the market should go up and hit this high right here, I'll be out on all my 4 total trade. And out of this 4 total trade, I will only lose 1x out of this 4x right here, which will be 3. Now let's calculate my profit target right here. So I'm going to be calculating my profit target right here based on my entry. My first entry right here was at this structure right here. See that? And I had my stop loss right here. I risk X all the way to the, let's measure to the current market price level. So based from my first entry to the current market price level right now, which is at this price of the 76.50, this is almost 2.3 risk reward ratio, right? And then based on my second entry right from the test of structure right here, I had another stop loss at this medium right here, and at the current price medium right here now, this is another 2.3 risk to reward ratio. You can see that is plus 2.3 risk to reward ratio. You get that now? Now I added my third position at the close of candlestick. That was on Monday 6th. I announced all my entry in my Telegram group. I always announce my entry. Today I announced my entry in my Telegram group as well. So if you want to get along with my trade, just get access to my Telegram group. I always announce my position. And then I had my stop loss at the high of this day candlestick and all the way down to this level. Now the third trade is plus this plus 2.6. So right now I have a 2.6 risk to reward ratio. You can see that this is plus. And let me get this up so that you guys can know it is plus and not maybe 2 or whatever. You can see that. And then I added my fourth position today at this medium right here after the break of market structure. I will show you the break of market structure on the 4-hour chart. Okay, do not worry, guys. Just want you guys to know how you scale up in the market, because a lot of traders always ask me, how do we scale up? How do we scale up? How do we scale up? Not all traders know how to scale up. So based on my entry level right now, I already have like a 0.5 result, which is not up to 1 risk to reward ratio yet. So plus 0.5. You can see that. Now I'm gonna lock in. I logged in all my profit to this level right here. So locking in all my profits to the high right here, that means the first trade I took in this market, I've already logged in 1x value. I logged in 1x value right here, that is 1. And then based on the second trade, I logged in almost 0.9. We can approximate that to be 1 as well, just for easy calculation. That is 1. And then based on the third trade, that is almost 0.8, right? That is a plus 0.8. So currently right now, I have logged in profit running to 2.8x. Right? I have logged in profit running to 2.8x on my 3 trades. You can see that. So if the market should go the other way around right now, the market should go the other way, 2.8 has been booked in as profit. So I can't lose more than 2.8. So let's say, for instance, if I'm risking maybe $5,000 on each trade, now multiply 5,000 based on what we have right here. That is 1 plus 1 plus 0.8, and then that is 2.8. Now multiply 2.8 by $5,000 right here on each trade right here. That is 14,000 right here. So this is wonderful. So if you can add this, so multiply this based on your position size, then you know the power of scaling up and how you can scale up in the right way. Now, I know I had a losing trade, right? Now let's subtract this losing trade I had right here. Based on this losing trade right here, I lost 1x right here. Now let's remove this x right here. Now let's eliminate one of these. I lost x right here. So let's give this x right here like a value of 1. If we eliminate this right here, this is going to almost like 2. So if you multiply that by 5, you still have a 10,000 range right here. So this is how you scale up your trading entries in the market. Imagine I risk all my total profit right here. All the total profit I've made in the market. Imagine I risk everything right here. Now I'm left with nothing. I'm now back to the beginning of the trade. So this is how you manage your risk as the market keeps on going. So what I'm going to do right now, once the market gets to this low structure right here and breaks down to the TP2, I will trade all my profits as well all the way down. This is how I keep on managing my trade. So what I'm looking for on this market right now, the market should get to this level right here, at least 1.2 risk reward ratio. The second trade is going to be 3.5, and the third trade is going to be 4.4, and the first trade is going to be around 3.6. So by the time you calculate all this right here, 3.6 and the 4.7, that is going to be around 8. And then the third is 3.5. That's going to be around 11.5. And with the 2 right here, like a 2, that's going to be around 13.5. You can see that. So if you multiply 13 rates or 13x and you subtract it from 1x, so that is almost 12.5 or 12. Now you multiply your 12 by your value of x you are risking in this trade. If you are risking $1,000 based on your 12x, that is 12,000. If you are risking 5,000, you know what that means. So that is how you scale up, in the market. You manage your risk. You are not greedy. You play a defensive game. So I'm a conservative trader and I always play a defensive game. I don't risk it all. No, I don't do that. I don't risk it all. My number one rule is I must protect my capital. My capital is my bloodline. That is my bloodline. I don't want to have a blown up account. Once you have a blown up account, that is game over. That is game over. I don't want to have a game over. I can't remember the last time I had a game over in my account. I can't remember the last time. So this is how you are disciplined. You manage your risk. You are not greedy. Right, guys? So this is how you scale up trades in the market. So a lot of traders, when they get in the first position, they get in the second position, they're in profit. They fucked things up at the third position. They fucked things up at the fourth position. They fucked things up at the final leg of the market after they've made a lot of profit right from. Imagine I risk everything. Let's get it all these drawings right here off. Imagine after I got in right here and I had my stop loss all the way down or to this structure right here, I made 2 risk to reward ratio right here, and then I made another entry from this level right here. I had my stop loss at this level all the way to this level right here, almost 3.4, and then I add another the third trade right here to this level right here, all this level almost 3.5. The market retraces all to this level, and then I risk everything on this bar which capped on 9th of November 2023, and then I risk everything up, and the market caught my profit. Everything I've labored for, everything I've suffered for out right there. Then imagine the situation I will be right now, because I will so much hate myself. I'll be in a very bad situation because I will be so sad I was able to get in this nice trade right there, and I made profit on my trade, and I risked all my profit right there, and the market caught me out. Now the market is not going in direction of my anticipation or in direction of my analysis, so I will feel bad. So this is why I always tell traders there is no infallible trading strategy in the market. Let me show you guys. The strategy I applied to take the third entry right there was the strategy I applied right there. But this strategy worked fine right here. This strategy worked fine right there, but it did failed right here. So this is why I always tell traders there is no infallible trading strategy in the market. The strategy that can never fail you is how you manage your trade, your risk, your money. When someone tells you we have a strategy, it is 99% infallible, a 90% working strategy, please run. When you hear the word 90% strategy, 99% strategy, it is something, run. Nothing like 100% working strategy. Anytime you hear the word 100% trading strategy, 90% trading strategy, blah 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 percent trading strategy, know that it's a scam. Someone is about to be scammed, right? And this is what new traders want to hear. Beginners in the market, they want to hear sweet word. They want to hear sweet word. They want to hear 100% strategy, 200% strategy, 500% strategy. No, the market doesn't work that way. And this is why when the strategy doesn't work the way it was being forecasted or being analyzed as the trader or the seller or the marketer sold the system to them, they get frustrated and they keep switching from one strategy to another. And before you know it, month upon month, years upon years, they have nothing to show because they are not disciplined to a particular system, right? Because this strategy failed right there doesn't mean the strategy will never work in any market. Now, let's get back to this. What actually happened right there? Why you need to be a disciplined trader? Because I use this strategy right here to make a lot of profit. Now imagine if I apply this strategy again right here to risk all my total profit in this market, I would have lost everything in this market right now. So because this strategy worked right here doesn't mean I have to repeat the strategy to risk all my profit. This strategy worked. It did work right here. You can see it did work right here. And based on this strategy right here, after I made let me zoom in right here so that you guys can see the strategy I'm talking about right here. Actually, this is a bearish or bullish inside bar. Break of the mother bar means a more downtrend, right? So I got in right there before the close, after the close of candlestick, and I had my stop loss at the high of this bar, and then I was able to make profits almost 3.7 risk to reward ratio, right? And then I applied this strategy once here again. And I had my stop loss at the high of this bar. The market went out and cleared off the high of this bar right here. It cleared out the baby bar. It went up again to clear the mother bar. It went up again to clear the structure right here. And then it later carved a doji candlestick or a spinning top, whatever you want to call it. And it keeps on coming all the way down. Just to tell you, the market is wise. The market actually knows what you are doing. The market knows. A lot of traders actually sold right. You can see the massive bearish candlestick after this breakout of this bar. So the market knew a lot of traders will definitely want to repeat this same strategy right there. So let me cut them out and see how wise are they. So the full traders, I'm so sorry to use that word, traders who were not wise, were being fooled by the market, and a lot of traders would have risked it all right there because they believe that, okay, this strategy worked right there, fine, it's going to work again right there, so let me take a bigger risk. Imagine someone who had already made from this level right there, someone who had already made like $5,000 right there, and they went out right there to risk all the $5,000 and they is left with nothing. Some traders would even go above their profit and risk more 10,000. Say, wow, I use this strategy right here to make $5,000. So if I can use this strategy right here with $10,000 risk, then I'm gonna be looking up to $5,000. So let me risk it big right here, and they lose the profit, they lose your entire account. This is why you need to be think based on probabilities, right? So the market is wise. If you want to trade in the market and you want to make money, it means you want to compete with one of the most brightest, intelligent people who are very clever, intellectuals, people who are good in what they do. You want to compete against them. You want to take their money. So if you want to take their money, you have to go extra mile. It's never gonna be easy. You want to compete with people who have been in this business for years. This is not a matter of 5-10 years. We have people who have been in this business for 10, 20, 30 years. So you want to get their money. Whenever you make profit in the market, you are actually getting someone else's money. You are getting money from someone else. And whenever you lose money in the market, someone else is getting your money from other part of the world. So that is what trading is all about. When you make profit, it's a loss of other traders, which is coming to your pocket as a profit. And when you lose money, your loss is someone else's profit. You need to understand that. So you are in competition with the brightest mind of people in the world right here. So you have to think. Okay? So guys, this is what I want to share with you. This market continues downward, and there isn't any guarantee right here. The market can still reverses up right here, and they clear off all my profit, whatever right here, and then, but I know if the market reverses right here, I'm still gonna walk home with a good profit without risking my account, and my account will add up. And this is why I am always grateful to the market. I'm always grateful in the market, based on whatever I can withdraw from the market, or any profit I can close in the market. I'm always grateful, because if you can withdraw profit in your trading account, get the cash and spend it on yourself, you've really done a great job. Most traders know only fund their trading accounts. Most traders have never withdrawn from their account. Most traders, all what they do is fund their trading account, fund their broker, deposit. They have never been able to withdraw since they have been trading. They have never made a withdrawal from their trading account. So if you are still in that group of traders, only what they do is deposit and not withdraw, you have to sit down and think and ask yourself questions. How long did you want to do this? You have to think about what you are doing. What are the things you are doing you need to change? And just like the trade we took, all this trade right here, I keep on recording all this trade. Because I know a lot of traders actually don't record their trades. Or what they do is, once they have the winning trade, that is all. They don't keep charts. They don't keep their record. That is what they do. Once they have a winning trade, that is all. That is the end. So I keep my chart. Whenever I have a winning trade, I go in, I keep my chart. I will show you some charts right here. I'll show you some charts right here so that you guys can see some of the trade the trade I took on GBP USD. I kept the chart for future references. You can see right here. This is the chart in my Google Drive. You can see the chart right here. I kept this image right here for future purposes. So whenever I want to go through right here, I can go through. I can say, okay, this is this technical signal bar right here. I went in, I bought right here, I long right here, and then I made profit right here. So this is how I got in on the day chart. So what did I have on the weekly chart? I also made a screenshot of the weekly chart, and this is what I did on the weekly chart. You can see right here, I put different intonations on this chart, different labelings right here. My H1, the boost trend, the pullback, the breakout, and I gave explanations right there. Traded bull entry on day chart based on the previous week, pullback of H2, period H1, bull trends was the weekly setup bar. This signal was morning doji star on day chart. So most traders they traded the GBP USD. They actually don't know what resulted in the bullish spike. A lot of things like that. They don't actually know what's going on. So I recorded everything based on my decisions in this market. So next time if I see this setup right here, I'm gonna have that confidence to repeat that system again. So this is all about trading. It's not just about just making the profit, and I also have losing trade. At the same time, I keep references of my losing trade. So this is how you can learn, you can improve in your trading career as a trader, right? Whenever you have losing trade, you keep your record. Whenever you have a winning trade, you keep your record, right? And whenever you see any trade pattern that goes in direction of your anticipation, which you never traded, you can as well record it down. Should in case of next time when you see that setup, you have the confidence to take it, right? So thank you guys. So this is what I want to share with you. So the question today is what are my next move in the market? What am I looking out for in the market? Is what I need to discuss today. So you guys can ask questions. You can make suggestions of any asset you want us to analyze in this live stream, and then we're gonna go through them, right? One by one, we're gonna go through them. So guys, make suggestion any asset you want us to analyze in this live stream. It could be in the forex, stocks, cryptocurrency, commodities, and the index market. So guys, comment on YouTube, comment if you are watching from TikTok, assets you guys want us to analyze in this live stream, and then we're gonna go through, right? So make your suggestions in the comments box. So let's go through GBP USD. I told you guys yesterday, those of you who want to jump into GBP USD, most of you said, oh, I can't miss this market right there. The market is bullish. I want to get in. I told you guys yesterday in the live stream, I said, don't go into the market with the hope you're going to long GBP USD. If you go in, you're going to be trapped. And unfortunately, some traders still went into long GBP USD. Right now, they are trapped. I told you yesterday, I said, for those of you who like to trade with indicators, right now your indicator should be showing you overbought in the market. I do not trade with indicators, but I know based on the knowledge of price actions and the long of screen experiences and exposure, I know the market actually is overbought, right? So for those who jump in right here, who want to long GBP with the hope price is going to go up, they are in a losing position right now. So I told you guys, I said, expect a potential pullback down of price, and then we should be looking to long at a lower price. And I already gave analysis on GBP USD yesterday. The levels I'm currently watching out for trade opportunity. So if you're right here, you can see if you jump in right here, I'm so sorry. That means you don't actually know what you are doing. You don't know what you are doing. If you jump in at this medium right here to make an entry, you don't know what you are doing. So sorry about that. You have to learn how to trade. You have to learn about the market. You need the knowledge of the market. And I told you guys, these are the two levels we are currently looking out for as a trader. The I right here, this I right here, and the I right here is a level of interest. So we could have rejection swings right here, but there isn't any guarantee. Maybe we're gonna have a rejection right here. We could have a bullish interest right here, alternatively a bullish interest right here. So we keep on monitoring to see what price is gonna offer. So another way right here to approach this market is to apply your Fibonacci retracement tool. I told you guys apply your Fibonacci retracement tool. So the last breakout which we had right here, I actually applied my Fibonacci retracement tool from the low structure right here all the way to the last high right here. You can see when price got to the 0.618 Fibonacci retracement level, I already foreseen this on that was last week Friday on the 10th of November. I already foreseen this. Someone said, why don't you trade with indicator? I don't believe in indicator. I don't believe in them. I like to do my things manually. And number two, I will never say all indicators. I will never say indicators are all lagging indicators. It depends on how you use indicators. But based on my years of experiences, indicator does not fit my trading style, does not fit my trading methodology. I like to do it manually, and once I get whatever I'm looking out for, I have to get into the market. I don't need an indicator to tell me when to get in or where to get out. I work based on price action because I've taken my time to learn the alphabet of the market. What is the alphabet of the market? How does the market speak to you? The market speaks to you based on price actions. Price actions is the language of the market. If you want to learn how to speak English language, you have to start from the English alphabetic system. Likewise, if you want to be good in mathematics, you have to start from the numeric figures, right? So if you want to be good in trading, you need to create time. You need to dedicate your time to learn about the language of the market. The language of the market is price action. Once you take your time to learn price action, then you're gonna see you actually don't need all these indicators right there. Sometimes when I see most of these indicators on traders charts, I always smile. I always imagine how traders trade with this kind of what indicator, whatever. I'm not condemning indicator. I do not mean indicator do not work. We have traders who trade with them. So just like I always tell traders, there are unlimited ways that leads into the market because there are a lot of trading strategies in the market, but what works for me might not work for you, right? So that is about trading. So I tend to get my result when I do my trading manually. And then right now, a lot of people have been talking about AI trading, AI indicator, artificial intelligence trading. Well, all those things are all bullshit to me, right? And I have my reason for saying this are bullshit. We have big guys in this game. We have the hedge funds, the insurance, the banks, the big guys who trade in billions of dollars. These guys have the money to pay the best programmer in the world to give them the best artificial intelligence system to make money. But in trading, this doesn't work, right? This has a system. It has a formula. All you need to do is understand the formula. Stop looking for a shortcut. There isn't any shortcut right here, right? You can't shortcut the market, the market, you can't shortcut it. If you try to do that, you're gonna end up, you're gonna cry, right? You're gonna learn the hard way. You're gonna learn the hard way. So right here, someone said, I like your confidence. Thank you so much. Thank you so much. So this is why I don't trade with indicator. I trade raw price action. I trade based on price action. What is the market telling me? I trade based on what is going on the higher time frame. And then I look out for volume. I always emphasize on volume, liquidity. Liquidity is the money. When there is no liquidity in the market, there isn't money to be made. If you get yourself in the market whereby there's no liquidity, there's no volume, you're going to struggle in that market and then you're going to be frustrated. Then at the end, you do what you don't want to do. So first thing, when I check the market, I look out for liquidity, volume. When I see volume, I go to the higher time frame. When I see what I'm looking at on the higher time frame, then I tend to study momentum. How fast is the market moving? How weak is the market moving? These are things I look out for. Then I start looking out for my point of interest. Point of interest are your key levels in the market. These are your support, your resistance, your demand, your supply zones. We have all these structures right here. So once I check all these things right here, I look out for the highs and lows of the week because I'm a swing trader, I'm a position trader, I'm a long-term trader. I look out for the previous highs, the previous lows, what is going on right here. Once I identify this structure right here, then I look out for the market structure. What is the market structure saying? If the higher time frame is telling me it's bullish, then I look down on the lower time frame to see what is going on. If I can see a bearish structure on the lower time frame, then I know something is conflicting against the higher time frame. Because if the higher time frame is telling me it's going uptrend, why should I be going low trend on the lower time frame? I don't want to do that. Of course, the lower time frame will show you the early change of trend, but I want to go in direction of what is going on the higher time frame because the higher time frame controls the lower time frame. And if you don't understand this, you will always struggle in trading. You need to understand the power. The real picture is on the higher time frame, and this is why most traders struggle because they want to trade on the lower time frame. And most traders believe is when you trade on the lower time frame, you tend to make faster money, which is not right. It is not true. The more you trade, the more you expose yourself to risk because whenever you execute a position in the market, you are exposing yourself to risk. So which means if you execute 5-10 trades in a day, you are exposing yourself to 10 times risk. So the lesser the trade, the lesser the risk and the higher the reward. It is not about the numbers of trade you take which is going to make you be profitable. It's just looking out for the setups that's going to give you the best result. You don't have to trade because you want to trade what you want to see. Right? Someone say, yeah, please tell us about liquidity. What is the higher time frame? When I talk about the higher time frame, I talk about the weekly chart, the monthly chart, the day chart. But this sounds so crazy to some traders. I was actually mentoring some students some of these days, and I talk about going to the higher time frame, the monthly and the weekly. And this trader said, what? Do you mean we go to the monthly and the weekly chart? What am I going to do that there? In fact, I don't have weekly chart on my time frame. I got it removed. I only trade from the 1 hour all the way down. Weekly chart, oh, I can't wait for a week, for months of trade. I have to trade every day. I said, well, that is good. Keep up with the lower time frame. So something about the market is you can't force people to do what you want them to do. You have to let the market to teach them. The market is right there to teach you a lesson. So the market is so brutal. It shows no mercy. It's right there to teach you the lesson. So that is all about trading, right? So when I talk about the higher time frame, I'm talking about the monthly chart, the weekly chart. Actually, I don't have 15-minute chart on my chart. Yes, I don't have the 15-minute time frame on my chart. I have to implement this because A lot of traders keeps on begging and pleading in my Telegram group, please mentor, coach, please, can you please just apply 15-minute chart to your chart so that we can at least give us some analysis on 15-minute chart. We are scalpers, we are day traders. And I said, whoa, okay, okay, I will consider that. So this is why I added the 15-minute time on my chart. On my normal chart right here, I have the 1 hour, 4 hour, day, weekly, monthly, and 3 month chart. This is what I have on my personal chart. So I don't go to the 15-minute chart, don't do that. But I have to try to at least help every traders. At least we'll be able to make some money in the market. So this is why I have to improve 15 minutes. So guys, I'll talk about the higher time frame, I'll talk about the weekly and the monthly chart. So GBP USD, I already show you what I'm looking at for GBP USD. So these are the levels you'll be looking out for. If I trader, I already give the level you'll be looking out for. So currently right now, I'm gonna modify my Fibonacci retracement tool. For those of you who don't know how to use Fibonacci retracement tool, I'm working on a course about Fibonacci retracement tool. So I'm gonna move my Fibonacci to the last higher low structure right here. So this market right here, we got a lower low right here, we got a higher low right here, we got a higher low right here. So to the present high in this market, which you tend to have a potential reversal, should be at this structure right here. So when you see, or when you check out my levels of prediction right here, you're gonna see right here, I stated this high right here, and this high aligns to the golden Fibonacci retracement level. What is the golden Fibonacci retracement level? What is the golden Fibonacci retracement level on the on what is the golden number? I mean, where is the golden number? The golden number on Fibonacci retracement too. So I want you guys to comment in the comment section. Give your comment in the comment section. The golden number of Fibonacci retracement too. The golden number. Golden number. Someone said 0.618. Lawa Bolaji. Okay. Just King says 0.5. Someone says 61.8. Someone says 0.5. Okay. I want more comment. Where is the golden number on the Fibonacci retracement tool? You guys can comment as well from YouTube. YouTube guys, please leave your comment. I want you guys to comment the golden number of the Fibonacci retracement level. The golden number. Type your comment. Right? We have just few seconds to go before I give you the answers. We have few seconds to go. 10 seconds. We have 10 seconds. Please guys, drop in your comment. I want you guys to participate in this live stream, right? I want you guys to participate. If you are watching from YouTube, comment the golden rule number on Fibonacci retracement tool, right? Let's go. I want more comment right here. I want everyone to participate in this live stream, right? The Fibonacci retracement golden number. Type your comment, type your answer, right? Okay, we have more 0.5 coming in. More 0.5 is coming in. Type your answer. If you know the answer, where is the golden number of the Fibonacci retracement tool? The golden number. We have 5 seconds to go. We have 5 seconds to go. And we have 3 seconds to go. Drop your comment on YouTube. Drop your comment if you are watching from TikTok. Drop your comment. The golden number of the Fibonacci retracement tool. 0. Good. Okay. Those who stated 0.618 are right. 0.68 is the golden number of the Fibonacci retracement tool. Is the golden number, and this is why you can see right here. I changed the color of this line to be orange, so I see it as a golden. Anyway, you can use any color, but I just like to beautify the Fibonacci retracement tool to just to be enticing to my eyesight, right? So, and most of you stated 0.5. 0.5 is the benchmark level. 0.5 is the benchmark level. So I'm gonna type it right there so that you guys can see. So first, let me put this chart down so I can give some details about the Fibonacci retracement tool. So let's get in right here. So you can see once you connect this tool right here, you have the 0.618. The 0.618 is called the golden number. This is the golden number right there. The golden number, GN, golden number. Why the 0.5 is the benchmark, BM. So benchmark actually means the average number, 0.5. So let me show you guys how this level works. We also have the 0.82. This 0.82 is for, I can call this level right here as strong momentum level. Strong momentum level, right? So let me show you guys how this level works. So whenever the market is moving an uptrend, whenever the market is so strong and is moving in a fast moving trend, that is momentum. You know, momentum is based on speed of the market. speed on the market. How fast is the market moving? When the market is moving at a very high speed, going up, going up, going up, the 0.382 will usually act as support for price in an uptrend, while in a downtrend, it will act as resistance. So whenever you find a strong rejection from the 0.382, the next question you should ask yourself is, how strong is the momentum of the market? If the momentum of the market is so strong, then 0.382 has the possibility to act as support for price or resistance for price in a downtrend. So this is momentum level. 0.38 tend to show you the strength of the momentum in the market. So in a fast moving market, you look out for 0.382 to act as a level. So in a market whereby the market is not moving in a fast speed, don't ever try to trade 0.82. One of the factors you should always look out for at 0.82 is momentum. Is the momentum strong? If the momentum is weak, forget about it. Look out for 0.5. Now, how can you use 0.5, which is the benchmark level? 0.5 is when the market is moving in a normal condition. When the market is moving in a normal condition, you get 0.5. Right? When the market is moving up, not too fast, not too weak, you get 0.5 right here. Right? So when the momentum is average, not too much speed, market is trending in a normal condition, you get your support or resistance at 0.5. But when the momentum is not so strong, maybe after a strong bullish move, and then the market is now coming down, retracing with no bull force, with no maybe sell force, then when price get to 0.18, you suddenly find a strong bullish breakout or pull up from this level. Then you know, okay, this 0.618 has a potential level as support or resistance. Then you tend to combine them with other factors in the market. Don't just apply Fibonacci retracement tool with the hope that 0.38, 0.5, 0.61 will act as support or resistance. There are factors you have to combine together. Just like when you want to prepare a delicious meal, you can't just put in your rice into your pot without adding other ingredients. You have to add other ingredients to make it to be nice. No? So the same goes to trading. You have to combine different factors together to make your probability to be strong. The more complex factors you can have supporting a trade, then the higher probability the trade becomes. Right? So when price gets to this level, you have to ask yourself about momentum. Is this level correlating to a key level structure in the market? Is it having a key level structure? What is the technical signal right here? What is the price action signal? This is where you look out for your candlestick patterns, right? What is the demand and supply right here? Is the resistance going right here? Is there any chart pattern on the lower time frame? This is where you switch to the 1 hour chart to figure out chart patterns that are formed at this level. But on the higher time frame, like a day, like the weekly chart, you could see a bullish engulfing bar or a pin bar. But if you can see a pin bar on the day chart on the 0.618 or 0.5 or 0.38, when you navigate to the lower time frame like the 1 hour chart, you will see an inverted head and shoulder. But if you see a shooting star, maybe in an uptrend, and you see, or maybe in a downtrend, you see a shooting star is like an upright head and shoulder on the lower time frame. This is how you decode candlestick to form patterns. These are another advanced sections of trading. So for those of you guys who want to take your trading skills to the next level, I suggest you get access to my freemium mentorship class. It is optional. It's for those who want to take their trading skills to the next level. But you can stay with the free mentorship program, just like the one we have right now. Okay, it is optional, right? So this is how you decode, you transform candlestick pattern. So there are different factors you combine with key level structures or retracement, whatever in the market. This is just a few examples, right? Now let's move back to our normal chart all the way down. Let's see that. Now let's define probabilities right there. So you can see right here in this market, we have a strong bull momentum right here. And we have a pullback structure right here. So you have to start looking out for how price will react to this level based on this strong bullish move right there. You can see it took those 3 days for price to move from this swing low right here to this swing top right here. Just 3 days. And then how can you measure momentum? This is the question being asked from traders in the Telegram group. How can we measure momentum? So right here, if you want to measure momentum right here, you use, I don't know the name of this tool right here. If you are on trading view, you use the date range tool. You use the date range tool. You can select this tool right here. You select the date range tool. I think, okay, this is it right here. You select it is different from the price range. You use the date range. So use the date range to analyze your momentum. You can see right here. So from this low to this high right here, it took just, this should be okay, from this level right here, this level right here, I want to measure momentum right there. So from this structure of this low all the way to this top, it took 2 bars and 4 days. You can see that it took 2 bars and 4 days. Actually, this was a Friday. Okay, this two actually calculated the non-business day, which is Saturday and Sunday. So it shouldn't take 4 days. Let's ignore Saturday and Sunday. Let's focus on the business working day. So it took 3 bars right here. Ignore the fourth days right here. So it took 3 bars right here within 3 days, or you could say it took 2 days. So this is the volume right here. You can see the number of volume right here. Now compare this level right here to this structure right here. You can see that. So it took almost 6 bars for price to get to this level based on the volume of 1.963 million right here. Okay, now let's combine this level from this range right here or to this high right here. You can see that it took 6 bars for 10 days for price to get to this high. So this is how you measure your momentum in the market. You calculate the number of days it takes for the market to rally up. It took 6 bars for market to move from this swing low up. Now let's use our price range from this swing low right here all the way to this top. That is 1% value in appreciation. Now compare this low right here to the peak right here. That is almost 2.64% appreciation. You can see how fast the market moved from this level to this level and within this level. So the shorter the days with higher volume, it means there is a high momentum. A journey, it should take price to move within 10 days. It took price within 3 days. It means the market is moving at a faster speed. For instance, if you are traveling from your continent to that continent, if you're going to be taking a commercial plane and you're going to take like maybe 18 hours or 15 hours, for example, if you are traveling to Australia, we all know Australia is very far. It could take you like days. If you take a private jet, like a warplane jet, like a supersonic jet, you know it's going to take you a few hours. It means the momentum on the supersonic jet is faster than the commercial plane. So that's just the difference. That's the best way I can give examples right here. So you have to measure the speed. How fast is the market? How fast is the market moving? This is about momentum. So these are what I want to see in the market. See right here, you combine this with your other factors in the market to make your decisions, right? So right here, we have a strong moving trend right there. So the point of high right here, which was a higher high, we got a low high structure right here, which is in a downtrend. This is the first high right here. You can't yet target. You can target as a higher high. Is price going to find rejection right here as a support? This is the question you need to ask yourself as a trader. Will price find support right here at 0.38? We have a strong bull bar right here. So price could find support. So what you need to do is whenever price get to this level, your obligation as a trader is now trying to define probabilities. What are the probabilities? How strong is the market giving us a level right here as a potential or say support level? You have to define probabilities. Probabilities. Price could hold right here. Price could still fall down more. When price get to 0.5, you ask yourself questions again. What are the levels that correlate to this level right here? When price get to the 0.68, you notice the golden rule number. So what are the levels right there? Based on this level right here, we are on 0.68. We have a lot of levels right there. We add a previous resistance right here. We have a resistance structure right there. And this resistance structure right here was a neckline of a double bottom. So this is a double bottom right here. For those of you who do not know, this was a double bottom. One of the factors that led to the breakout. As well, a lot of you will say, okay, during this day, there was a news factor right there. That was a fundamental factor, that contributed to the spike in this market. I told you guys one of the reasons I don't like to focus my attention on news. Whenever I focus my attention on news, it tends to disrupt my technicalities or technical views of the market. So I don't want anything that would tend to disrupt my mental decisions or my goals or my plans. This is why I'm not a trader that focus on fundamental news or fundamental analysis. The only news I always put into consideration, I always monitor is the interest rate. Based on my years of experience in the market, whatever the news is going to do in the market, the technical will always show you signs. Now it is left for you how you can decode this information. Before the news broke out that day or yesterday, I already know the technicality is showing us a potential bull breakout. And the news came out to be positive for the GBP USD. So based on the technicalities, I had already set my trade right here. I know we have a lot of factors right here. And the first Fibonacci retracement I applied right here was from this low swing right here all the way to this high of this market at this structure. And this level formed at the golden number. You can see that? So for those of you who do not see what we have right there, let me show you how the golden number formed right there. You can see we had the double bottom which formed at the 0.618 golden number, which formed at this structure right there. You can see how it formed right here. This was this second bottom. And price broke another bigger bottom right there. We have a bigger bottom sharp pattern right there. So for those of you who do not know, we have patterns inside patterns, right? For those of you who don't know, we have a lot of technicalities right there, which most of you guys who are new to trading, or maybe guys who do not take note of charts, you have a lot of technicalities right there. And then I held in one of my live stream, I was asking traders the patterns they can see in this market. If you attended the live stream, you should recall we mentioned a lot of patterns right there, whereby a lot of traders were giving comments about different patterns. So this right here, let's get this off. This right here was a double bottom pattern, the breakout and the retest of the neckline. Another double bottom for an uptrend. So there are a lot of patterns right here. Technicalities, supporting Fibonacci level, supporting demand structure. And again, let me show you a demand structure right here, because most of you guys mix up demand, supply with support and resistance. They're actually different. Demand and supply are different from support and resistance in the market, but most traders tend to combine them. Right here is a demand structure. You can see right here, we have, some of you will call it order block, whatever name you call it. You can see right here, we had a strong bullish volume right here. This was a demand structure right here, a demand structure for price. When price got to this medium right here, price got a bullish spike based on past historical actions in the market. And when price got to this level once again, price confirmed this level as a liquidity level, and price continued to build up. There was a accumulation of prices right there. We call it accumulation, whereby the market makers, the institutional traders, the hedge funds, the big banks, they keep accumulating the market right there. They actually don't want their actions to be obvious to the majority, to the public, because whenever the institutional traders want to move, they always move silently. They actually don't want to attract the public. They don't want the market to do the obvious things. Of course, if the market should do the obvious things, the institutional traders, they won't make money. So they always want to move silently. Now, this is led for traders who know actually what is going on right there. So they started accumulating this before the news gave out. You can see where I actually placed. I was on a live stream when I told you guys, let's end up this live stream so that I can go and place my trade. It was on Monday evening. You can see how I got my trade right there with actually after I got in right there with a buy limit order, my trade didn't go to any loss. I think I didn't have, the market didn't take me to any loss. Instantly, my buy limit order was triggered. The market threw me into profit, and the following day, that was a massive spike. And I told you guys, I announced this in my Telegram group, guys, I'm out on this trade. But after price got to the resistance structure right there, I don't want to be greedy. Once I see what I'm looking out for, 150 pips is okay for me. 150 pips within a short period of time, it's okay for me. I don't want to be greedy. I'll wait for price retracement. After I got my 150 pips, I got out of this market. Boom. Right? So this may sound so complicated for traders. Do not worry. Give yourself time, patience. I told you guys, give your time, patience. This has taken me years of failure. Not giving up is what kept me going. You only fail when you give up. For as long as you don't give up, you haven't failed. You only fail when you give up. And failure is the price you pay for trying. Failure is the price you pay for starting. So you only fail when you give up. So Give yourself a patience. You will definitely get it. So if you want to learn about trading and then you are so desperate and then you hate yourself because you're not making profit the way you should be making, making profit, then you are taking things too far. Give yourself time, patience, exercise patience, let things flow naturally. Because if you want to trade for a living, it means you want to venture into a field that can give you unlimited wealth beyond imagination. I told you guys, forget about trillions of transactions are transacted right here every day. Forget about it. I don't believe trillions of transactions trillions of dollars are transacted in the market every day. My belief is unlimited transactions goes on in the market. The money right here is just like the sand of the sea. You can't count it right here. Forget about 6 trillion, 9 trillions, 8 trillions of dollars. This is more than that. This is the transaction that goes on in the market is more than that. Combine the crypto market, the stock market, the index market, the commodity market, the futures market, all these markets, combine them together. Once you have this basic understanding, you can trade any type of market you want to trade. And this is why most traders always get their surprised when I tell them I trade forex, I trade stocks, I trade cryptocurrency, I trade commodities, and I trade index market, and I have results to show. I give all my entries in my Telegram group, and once I give my entry, all my trade are always going on as being forecasted. If I give out 10 trades, at least 7 right here will be profitable. 6 right there is okay. You don't have to have a 100% winning strategy to be profitable. And this is why traders fail. Traders are looking out for a holy grail to give them 100% trading strategy. You can't get that. If you execute 10 trades and you have 6 wins, 7 wins, you are a good trader. If you have 5 wins with a good money management, you are a good trader. If you have 10 trades if you execute 10 trades and then maybe you lose 5 trades, that is times X. If your X is $1,000, this give you what? $5,000. You lose $5,000, right? So if you have 5 wins, which is the minimum of 2x, and you risk the same maybe $1,000 right here. So this is 10,000. So you subtract 10,000 from your loss, you still have a profit of 5,000. So it's all about how you manage your risk. It's not about your level of your winning rate, whatever that really matters. It's how you can manage your risk. That is what really matters. The only way you can defeat the market is about the way you manage your risk. Forget what will give you money is not your strategy. It's not your strategy, your knowledge of technical analysis or fundamental analysis. No. The only way you can beat the market is how you manage your risk, how you allocate your money to the market, how you manage your risk. This is what's going to make you to defeat the market. If you think you're going to get into defeat the market based on your technical analysis, your knowledge of chart patterns, your resistance, your bullish engulfing bar, your liquidity, your ICT concept, your block order, your indicators, your whatever you think, the market will always defeat you. The only way you can defeat the market is how you manage your risk, right? And the knowledge of yourself is important. If you don't understand yourself, which is the psychological aspect of trading, you can never defeat the market, because the market will always play with your emotions. The market will always play based on your intelligence. Market really want to know if you actually know what you are doing, right? The market know where you set your stop loss, and this is why the market will always move out to hit your stop loss and then later continue in the direction of your trade. And this is why you see, oh, the market hit my stop loss and the market still later went in the direction of my trade. Oh my God, the market hit my stop loss. Oh, the market actually know where you put your stop loss. And this is why I am creating a different course on how you're going to set your stop loss in the market. So let me show you something in the market on US oil. So for those of you guys who have been asking why I was seeing the trade on US oil, because a lot of traders actually said, oh US oil is going to go up, I'm going to throw you out right here. So let me show you how I set my stop loss right here. I told you guys when price was making a retracement on US oil, there was a way I have to manage my risk right here. Okay. If I had placed my stop loss at the eye of this swing low right there, you all know the market would have cut me out right there. Now I told you guys I made entries right there, 1, 2, 3. If I had placed my stop loss right there, the market would have cut all my positions out. I never did this because I actually have the sound knowledge of how to place my stop loss in the market. I never placed my stop loss right here. If I did that, market would have cut me out. So let me show you how I placed my stop loss, right? I placed my stop loss after I know I've traded all my profits. my first, second, and third trade. I trade my profit to break even. I left my stop loss, my trailing stop. I left my trading stop at this high of this strong bearish candlestick, because I know the market will come right here to cut out some traders, to reduce the market. The market actually don't want you to make money. Your brokers don't want you to make money. The institutional traders don't want you to make money, because when you make money, your brokers are going broke. When you make money, you are getting the money from the institutional traders, and institutional traders don't want to pay the public money. Your brokers are sad when you make money. They are happy when you lose money. So these guys always have a way to make sure they cut you out, to reduce the number of people to take advantage of a setup. So this is why the market will never do the obvious things. So the best way you have to make money right here is think outside of the box. Think against the crowd. Don't act based on the crowd mentality. If you act based on the crowd mentality, you can't make money right here. So this is what I did. I trade all my stop loss right here. When the market came right here, you can see the market stop right here and then continue all the way down, whereby a lot of stop losses have been hit right here. A lot of traders have been hit. So a lot of traders will be so sad right now. Oh, had I known, I should have played my stop loss. I actually know if I had to place my stop loss right there, the market will cut me out. So I had my trade profit right there. So this is how you set your trade. All right, guys. So thank you guys for watching from YouTube. Thank you guys. You guys are amazing. I told you guys this live stream is going to be just 1 hour. So thank you so much. So let me just quickly go through my list tonight, so that you guys can see what was going on in the market. So a disclosure right here is I have 4 short position on US oil, and I'm still holding on to that. And I have some assets. I'm monitoring GBP/USD. We are still looking out for a pullback. And the Euro USD, I don't like the pattern on Euro USD. So let's see if the pattern can still come out right here. So as you can see, the profits are out. Let's see if the market is going to make a retracement all the way down. This channel right here has been broken. Let's see what we're going to have right here. So what we have right here now is we can see how this pattern right here. But what I can see right here is that I want to get out this pattern right here. So I'm still going to trade this high as maybe a potential resistance support structure. So for those of you who are trading Euro USD, what you need to do right now is you need to start focusing your attention to see how price is going to react to the upper band of this rising channel. You can see the upper band right structure right here has been broken. This level has been broken. So you need to start looking for how price is going to react to this upper band. You can see we had a high, broken high. So let's see if this upper band will act as a dynamic support for continuation of price on Euro USD. So this is what I'm looking at for Euro USD. So, and as well, let's check the Australian dollar paired against the USD. Australian dollar paired against the USD, I'm seeing a technical indecision candlestick. This is a doji candlestick. I'm creating a course on how you can trade doji's candlestick strategy, right? So based on what I can see on Australian dollar paired against the USD, there's a higher possibility or higher potential sell off based on the doji candlestick, because the market is about to close right now. So if the market can carve a doji candlestick at a key level structure, then it's a signal that the bulls and the bears, none of them won this market right there. But anyways, the momentum is still in direction of the bull, because previous day candlestick was a strong bullish candlestick. So let's see tomorrow maybe the bears are going to be willing to clear off the low of the doji candlestick. So one of the ways you can take this buy is to go to the lower time frame and try to seek chart patterns that can give you like a bearish interest on the 4-hour chart or the 1-hour chart. So if you can see something like a double top, like a head and shoulder chart pattern, you could try to short this entry right here. So based on the Australian dollar paired against the USD, but you have to be very careful based on the strong bullish momentum that we had on Tuesday, right? And New Zealand USD, I don't like this pattern right here. I still prefer AUD to USD. USD Canada, no, I love this trade right here. No, I actually wanted to make another entry right here, but I don't want to have a lot of open positions, so I had to reduce my positions right there. Okay, so based on gold, I told you guys yesterday, I said if you want to long gold, you have to be very careful. I told you guys, I said we have a lot of levels on gold which you have to be very careful. I told you guys yesterday, and that's why I always make a record of my live stream, right? I told you guys, for those of you who want to long gold, you got to be very careful. You got to be very careful because there's a minor structure above. This level could act as a resistance for price, and then it happened as the way I forecasted. You can see right here. So this level is still holding up. So I want to see a strong pattern. Maybe we can have like maybe a double bottom for continuation. That would be nice. Like what I stated yesterday, this is what I said. I said if price can gravitate up to this level right here, see come down to form a double bottom, that would be nice for us. Maybe a sharp pattern to give us more validation. So I don't just want to get in right here and start buying because I have a resistance structure right there. And the risk to reward ratio right here is not favorable. If I'm going to be making an entry right here based on the next candle structure right here, the risk reward ratio is not favorable. Likewise, I have a strong resistance structure above. You can see the high right here and the high. So I have a lot of hindrances on the gold. This way I'm taking careful on gold. So currently right now, I am just monitoring gold to see what gold has to offer. And all the way down to let's check out other assets. I have Australian dollar paid against the Canadian dollar. Most of my members are actually trading Australian dollar paid against the Canadian dollar. So if you are in the Australian dollar paid against the Canadian dollar, my advice right now is to take your profit, because I sent out these trading signals in my Telegram group. I sent out the picture. If you don't get the picture, or if you don't get the update, it means you are not active in the Telegram group. So to get access to my Telegram group, if you are watching from YouTube, click the link in the description of this live stream analysis. Alternatively, you could, if you are watching from TikTok, follow this instruction right there to join my Telegram group today, right? So I shared out this image on how you can trade the Australian dollar paid against the Canadian dollar. Let me see if I can just show you guys the chart right here. I always show chart. So I got the, let me see if I have the chart right here. Chart analysis. I showed guys right here. Okay. I think I have this chart right here. Let me just see if that's a way. Okay. So as you can see right here, this was the chart. I don't know if you guys can see this image properly. This was the chart of the Australian dollar paid against the Canadian dollar on the 4-hour chart. You can see at this medium right here, say traders should go for long entry. You can see have your stop loss lower. So traders who took this trade, Australian dollar Canada setup right there. You can see this trade. Likewise, I showed you guys, I said this is why I am still holding on my short trade on US oil. I will exit if the descending trend line failed to hold as resistance. I gave reasons why I was holding my trade on US oil and where I'm putting my stop loss. You can see that on US oil. So I'm a transparent trader. Anything I'm doing in the market, I always share with traders. I have nothing to hide. So this is one of the ways you can track my record to know if this guy really know what is or whatever he's saying. So I have my references. So whatever I'm doing, I always share with traders. So if you have been in my Telegram group by now, I have a lot of traders who always comment and always compliment, and they always give thanks. I always tell them all thanks belongs to God, right? Or God is the one who gave me this knowledge and skills. So I don't think I know anything. All glory belongs to God. So what we have right here, let's look at for a potential pullback down right here based on Australian dollar Canada. So if you took this trade right here, you should be out in profit only if you want to be greedy, right? This way I said put your stop loss right here, target is high. Actually, I add a lot of take profit target. I said this is TP1, and okay, I target it right here. This was actually what I stated right here. Let me show you guys. I think I shared this right here. You can see I said this is TP1. You can see right here, TP1. You can see when you stop loss right here. I said this is TP1, this is TP2, this is TP3. So this is for swing trader. So if you are a day trader or a short-term trader, this is TP1. You can see the TP1 was being hit. You can see the 4-hour chart right here. So I always have my evidence whenever I share. Okay, this is chart analysis right here. So join right there. If you haven't joined the Telegram group, you are still missing. All right. So TP1 has been hit. As a short-term trader, take your profit. So for swing trader, let's see how we can keep on riding the trend on Australian dollar paid against the Canadian dollar. So as a swing trader, you should be looking out for a potential pullback to this trend line. If you're a swing trader, right, you should be looking out for a pullback to this trend line. So if you're a swing trader right now, your stop loss should be try to be moved to break even. Try to protect yourself. Move your stop loss to break even, because the market is going to pull back to this trend line, and this level has to have the support to reject. So your stop loss should be moved from this level right now to your entry right here as a break level right here, and the market could hit your stop loss. So this is why you need to think whatever you're going to do. Maybe you have to get out right here. You could get out right here. Once the market make a pullback down, you could make another entry. Or if you want to just trade your profit or stop loss for break even, the market will take back your profit and then cut you out. So think wise, decide the best decision for yourself, right? My obligation is to show you the probabilities and the best things I think I will do. So you have the final decision, whatever you want to do in the market. So this is what I want to share with you guys. And then NASDAQ, yeah, visuals. I told you guys about NASDAQ. I've been following the chart of NASDAQ, and I told you guys yesterday my view on NASDAQ. So if you are watching from YouTube, watching from TikTok, let's go through NASDAQ. I showed you guys my view on NASDAQ right today. Yesterday I told you guys what I'm looking out for right here. Right. So I told you guys Price is I think this was on Tuesday. I told you there's a possibility of a resistance structure to come out. So currently what we have right now on Nasdaq, price is at a resistance structure. So if you're a trader right here on Nasdaq, you know price is not only at a resistance structure but at a major structure, at a major key level structure. This was a resistance structure from the 17th of July, and this level is also a neckline for the double top we had in the year 2021. That was December 2021. This is one of the reasons, this is one of the things you see when you go to the higher time frame. So you can see right now, this was the neckline of the double top we had on the weekly chart. Actually, this double top is not obvious on the weekly chart. So let's check the daily chart to see if it's double top or maybe it's a broadened top. On the day chart, this is what we have on the day chart. So let's check it out. We have right here, let's move back to past historical price action right here. You know, like I stated right here, I said this is a double top. Actually, this is a broadened top. This is a broadened top. We have right here as the first top, and say right there the second top. This is the neckline right here, the breakout. You can see the trend line, the key level structure right here was the support for price right here based on past historical actions. That was in the year 2021. Yeah, 2021. You can see right here support. So let's trace this line all the way. So this is the line right here. This is the price of 15,720, 15,729. Now let's go forward. 15,729, 15,729. So this is a powerful resistance structure. So if you are a trader right there, you have to be very careful of this structure. You can see when price tested this structure in the year 2023 July, price got a what? A downtrend through a double formation of a double top. So as a trader, what you need to do right now, if you are looking for a long entry on Nasdaq, you are actually you don't see what is going on in the higher time frame. So currently what we can have right here, if you are an aggressive trader, you could be looking out for a short entry, but I don't want to make an aggressive entry right here based on the strong bullish momentum we got right there. Remember, I always say analyze the momentum before you make your decisions right here. You can see, now ask yourself how long it took for price to rally from this structure right here to this structure right here, and from this structure right here to this structure. You can see all the bars right here are strong bullish bar. We had only few bearish candlesticks right here, and these few candlesticks, bearish candlesticks right here, were very small bearish candlestick. You can see very small. So it means the momentum right there is strong. And then let's analyze what happened in the past in the market. You can see when price got to the resistance structure right here, this swing high right here, I told traders you have to be very careful because we have a breakout of a channel right here. Those who try to short this bearish reversal candlestick were where? They were bearish trap. You can see the strong bullish bar right here. So take note, be careful. It is likely price might repeat what happened right here to trap another sell-off of traders right here to be bearish trap. So this is what you need to do. This is why you need to be very careful, exercise patience. As you can see right here, there isn't any pattern right here. This is where your patterns work out. Your head and shoulder, your double top, your this channel, whatever you call them. This is where they work out. When you figure out a signal bar on the higher time frame, they exercise patience to go to the lower time frame to see, is this pattern giving us a definitive or a reliable chart pattern. So if you can see a pattern right here like a double top, like a head and shoulder, whatever, then you can look out for a break of the structure, and then you look out for a small entry. Get in with a small position size before you start increasing your size. So this is where most traders get it wrong. When you want to make your first entry, you don't get in with all your position size. For example, if the amount you trade on your account is on your entry is like $1,000. For example, if you trade $1,000 in your account as your first entry, don't get in with all your $1,000 right here. Get in with 200 because you never know what can happen. No one can tell. For example, those who got in right here now, they were being reversed up. You can see that. So if you risk $200 right here, you only lose 200. Now, if you make all your $1,000 right here, you lose all your $1,000. So this way, I always like to get in. And whenever I make my entry in the position, I always say, I initiated a small entry. I initiated a small position size. I will only increase my position size when the market go in the direction of my anticipation. So I try to get in. I don't like to put all my risk at once. Someone said, I don't have any idea on trading. Please, do you have beginner's lectures? Yes, I have beginner's lectures, and these are premium mentorship class. So you can get in, or you can get in through the link in my Telegram or my YouTube channel. I have premium mentorship classes where I dedicate my time to mentor people. So this is a free class. So I talk generally about any topic in the market. So if you want to level up your game, you want to improve your trading skills, you can opt in for my premium mentorship class. You can check the link on my website for the prices right there. Right? Someone said, please, how to know our leverage? I am currently working on a video on leverage. I promise you guys, this video will be out this week. How you can choose your leverage, how you can work on a reliable brokerage firm that will give you the best leverage conditions. So I'm currently working on that video. Please exercise patience with me, guys. Your question will be answered this weekend through my video. Once I release the video, I will send the link in my Telegram group, and this is why you need to be in my Telegram group. If you are yet to join the Telegram group, follow the instruction right here on the whiteboard. If you are watching from TikTok, if you are watching from YouTube, follow the instruction under my YouTube video, right? Thank you. So you get in right here with a small position size, and what do you do next when the market keeps on moving in direction of your anticipation? Once you get in your 20 right here, and then the market keeps on forming a low high, you keep on adding a low high. When the market gets right here, don't add position, trade your profit well. When the market breaks this structure and break it down, you add to your position. So this is how you add, you scale up, then you keep making money. Don't go in once for us. When you go in once, you lose money, and you are back to square one. You're back to the beginning of your journey, right? So someone said, what time expected? I should release this video this week. I can't really say the time. I know this week I'm gonna release. I told you guys I'm a private hedge fund. I'm a private. I trade my portfolio. I also trade for my private investors, right? So I need to dedicate a lot of time for my analysis, for my decisions in the market. How to manage my portfolios, right? So this is why I don't really have time. Unlike other traders on YouTube, I don't really have much time. I have to, I only have most of my time is on weekend. Even though I don't trade all the time, there are still other things I have to keep up with the market. And you guys know I trade 5 different markets: forex, stocks, cryptocurrency, commodities, and index. Leverage is the amount of money your broker fund is your account. They bring in 99%, right? So leverage is like it's like a loan from your broker. Leverage is like, okay, let me just go through leverage right here. Leverage is like a loan from your brokerage firm. So most time when you're about to open an account on your brokerage firm, you'll see one kind of a ratio. For example, if you are given a ratio, let me just clear this off right here. Leverage is like a loan. It's like when you take a loan, you borrow the fund, so your brokerage loan you a money based on the belief you have the financial capability to return the funds, right? So whenever you want to open an account on your brokerage firm, whatever brokerage firm you trade, this is what you do. And this is why I always recommend traders, traders. I told you guys on Tesla, I said I'm looking out for a long entry on Tesla. So for those of you who said Tesla jump, I am not surprised based on what is happening on Tesla and what? It's Apple, right? Apple. I'm not surprised. I already give this analysis already. So if you're not if you're having to be attending my stream, then you miss that, right? So right there, whenever you want to open an account on your brokerage firm, you see this ratio 1 to 100. Most of you don't actually know what it's all about. You see ratio 1 to 500, right? You guys will see ratio 1 to 1000, right? This is what you guys see. You guys can even go up to 1 to 2 and 2000. So what does this ratios level mean? This ratio means for every $1 you have in your trading account, you can take a trade of $100, right? For every $1 you have in your account, for ratio 500, you can take a trade of $500. For every $1 you have in your account right here, you can take a trade of $1,000. For every $1 you have right here, you can take a trade of $2,000. So when the market goes in the direction of your analysis, you tend to make money faster. And when the market goes against your analysis, you lose money faster. So leverage is a double-edged sword. You have to be very careful whenever you want to trade with leverage. So my advice for traders is, as a beginner trader, it's best you don't trade more than leverage 1 to 100. Or maybe if your brokerage offer 1 to 50, that is good. Or in fact, just trade 1 to ratio 1, which means you're not trading in leverage. I gave details of this leverage in my video. So when this video is ready, I'll post it on my YouTube channel and I'll send you guys the link, right? So this is what you need to know for now about leverage, right? So for every pip in the market, your profit will multiply by this value. For every pip, your profit will multiply by this value. And when it goes against you, your loss will multiply by this value. So that is what it means, right? Thank you. So guys, I got to go right now. This is a time whereby I set my trade, implement sell stop, sell limit, buy limit, trade my profit, adjust my profit, take my profit, analyze the market for my decisions. These are the market I do it, as a swing trader. The day close of candlestick is important to us. It is important. As a day trader, the end close of price is important. For example, right now, if I'm trading Nasdaq right now, this bar right now, I have to study it, ask myself questions, go through my rules, go through my everything, cross-check for reversal, my reversal rule, my trending rules, what is going on, blah, blah, blah. No, these are the time I do these decisions, I make decisions. So I have to put an end to this live stream right now. So if you like this live stream, if you enjoy the live stream, okay, I promise, guys on YouTube, Anthony using Unquote. Let me just go to AUD switch and the USD JPY. After AUD switch and the USD yen, I'll put an end to this live stream so that I can create time as well to go and make decisions in the market so I don't miss any trade opportunities in the market, right? So let's go to the AUD switch. First, let's go to the USD yen because USD yen is closer right here. USD yen, I told the US guy yesterday, I said we had a channel. No, let's go to the other chart. I have a different chart right here. Let me just close up this chart right here. I don't want to use this chart right here. Let's close this chart. I'm going to leave. Now let's go to the yen chart so I can show you my chart right here. I told you guys yesterday, I told you guys yen is done. Yen was done. I said yen is done yesterday. I said yen is done with the sell-off. So if you see one of sell-off right there, it means you are not seeing what is going on the pattern right we got right here. I stated we got an inner channel right there. So if you want to chart right here, you are making the wrong decision. You should be looking out for long entry from support and then short entry from resistance. So this is what we had right here. You can see today it was a day trading strategy. Long again from support. You can see that. So this market still go in a ranging medium. For yen, if you are a day trader, you will be looking out to take your profit at the high right here. Looking out to short from resistance. So this is what we see right here on yen. So as a swing trader, this is not my trading strategy. I don't want to be going out within a short period of time, going out, going in. No, I'm a swing trader. I want to look out for an open trend whereby I can ride the trend. I don't want to trade the ranging market. So this is a trade for the day traders. So every day trader, you should be close to, you should have closed your position right now because it's going up and going down. This channel is kind of too narrow for me to trade as a swing trader. So this is my view on USD yen. Market is still bouncing in the channel. So make sure your chart looks like this. Now let's go to the AUD switch. AUD switch. AUD switch. What do we have right here? AUD switch. This is what I have. Wow. What is going on AUD switch? What is the view right here on AUD switch? Let's check it out. Let's check it out. Let's check it out. First thing when I open a chart, I go through my higher time frame. I see what is going on the higher time frame. We had a channel on AUD switch. Anyway, this channel is not respecting price. Let's just get this out right here and let's connect our trend line from this high right here. I fire it all the way up and I try to get this trend line all the way down. This is a major line right here, major trend line, and then we have another trend line right here from the swing low all the way right here to this high right here. I fire it all the way down to this structure right here. Trend line has been breached. Trend line has been breached 2 times. We have it. No, it wasn't breached right here. It was rejected right there. It was breached and then rejected down again right there. So we had a double bottom right there. So based on what I can see on this pattern right here on the day chart, let me just let this trend line to actually be seen on the day chart. So let's check out the day chart right here and the day chart right here. Let's make it to show on the day chart. And based on the day chart right there, this is what we had right there. So based on what I can have on Australian dollar paid against the switch, I don't like this price action right here. Market is just bouncing up and down. This is what I call a choppy market. There's no specific direction right here. So I don't trade this type of market. You trade this type of market, you put yourself in a lot of risk. Trading is risky. It's a game of probability. So don't put yourself in a trade that has more risk. Since trading is about risk, why do you want to increase your risk? You should look for a way to reduce your risk. So based on what I have on Australian dollar switch, I will never trade this kind of market because this market bouncing without a specific direction, right? Thank you guys. So guys, I got to go right now. If you like my live stream, share this stream and follow me on YouTube. Guys, follow me on YouTube. And guys, follow my Facebook page. I have a lot of videos on Facebook. Follow my Facebook page. Follow my Facebook page. You can use the Telegram link. Once you are in my Telegram link, type the keyword Facebook and you'll get the link to join my Facebook page. let's go to the stock market so that I don't offend the stock traders. I know we have a lot of stock traders right here today, and they're gonna be offended if I don't actually analyze stock. Tesla's gapping up. I already told you guys how I took this trade. I accumulated more stock of Tesla up. I already gave analysis about gold. So Victor Evan, you came late. So check my YouTube live stream for analysis on gold. Tesla as well, gap up. I'm not surprised. I already told you there's an inverted head and shoulder right here. So if you guys have been following my live stream, you should be making money. You guys should be making money. If you have been following my analysis, you guys should be making money. I told you there's an inverted head and shoulder right here, and I'm looking out for a breakout. So I'm already accumulating Tesla. So you guys should as well be in this trade right here. Okay. So thank you guys. Got to go right now. Thank you guys. Good night, good morning, good evening to you wherever you are in part of the world. Take care. See you tomorrow in the live stream 12 p.m. GMT +1 on YouTube and TikTok.